I could take what I just told you in the last however many minutes that was and put that out as a complete video, because nobody's talking like that. Nobody's giving you the full depth of understanding as to what these types of analysis are.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
I think we should talk about the banks first. Let's go to the banks first. All right. So now I want you to notice, that when I'm talking about the banks, now you can go and look at the US dollar index, right? You can do that too. But what I like to do is look at the gold spot. And the reason is because anytime that you see uncertainty, all right, anytime you see uncertainty when it pertains to Forex or the markets, when it comes to interest rates, inflation, when it comes to bank closures, when it comes to just, anything that's abnormal, when it comes to things that are fundamentally impacting the market, then what's going to happen is you're going to see gold rise. All right. In fact, I got a YouTube video dropping tomorrow that I'm going to talk a little bit about this on YouTube and give a gold trading strategy for YouTube. But I'm going to kind of give you more in depth tonight. So the first thing is this. Number one, when we're looking at the market, first thing is technical analysis. Write this down if you're taking notes. Technical analysis trumps everything else. All right. As far as the types of analysis. Now there's three primary types of analysis. One is technical analysis. Number two is fundamental analysis. And number three is sentiment analysis. Okay. Now, technical analysis is what it sounds like. It's the technicals. It's the candles going up and down. It's the price action. It's the indicators. It's the strategies, the fibs, the support and resistance, the trends. That's technical analysis. When I see a trend line break, I enter. That's technical analysis. When I see support reject, I'm buy because it's technical analysis. If I see a rejection at resistance, I sell because that's technical analysis. All right. So for any beginners in here, if you are a beginner in this class, that is what technical analysis is. Technical analysis analyzes the charts. Okay. And it doesn't really incorporate everything else into it. We're not looking at news. We're not looking at fundamentals. We're not looking at interest rates. We're not looking at anything. We're just looking at the charts. It's the primary way that most people, retail traders, trade. Now, fundamental analysis, and I want you to hear what I'm saying very clearly. Technical analysis trumps everything. However, the big banks do not trade technicals alone. Fundamental analysis is the deeper, it's the next level. It's a little bit more advanced. It takes a little bit more understanding and practice. It takes some knowledge. It takes a little bit more to be a fundamental trader. That's why you don't see a lot of people talking about the fundamentals on YouTube. You see a lot of technicals. When this line crosses this line, when this RSI is oversold or overbought, when this happens, when this pivot, that's fine. Even price action traders, when we see support or resistance or a trend line break or a fib, a golden zone, like all of that is good, and I'm with it. And that's where most Forex traders live. That's where most retail traders live. And to be honest with you, that's really the extent of most YouTube traders. They are retail traders at most, and they wouldn't know what to do when it comes to trading like the real banks. The banks are not sitting there waiting for pivots to reject. The banks are not sitting there waiting for moving averages to cross. The banks are not sitting there looking at RSIs and MACDs. They're not doing that. In fact, the banks are not looking at technical analysis in and of itself. They are looking at technicals, but it's not in and of itself. Okay. The next level to that is fundamental analysis. That is where we start to find the market condition. Okay. Fundamentals are what go into creating an environment for for technicals to happen. All right. Technicals happen because fundamentals cause them to happen. Fundamentals are when we see news events, economic events, speeches by presidents and Fed chairs, interest rate decisions, inflation rates. When we start to see Michigan consumer, we start to see all that kind of stuff come into the market, news events. That is fundamental analysis. It's the condition of the market as a whole and how the price will react in that certain environment. Does that make sense to everybody so far? Now, even deeper, you thought I was going to stop there. Even deeper than that is what we call sentiment analysis. Sentiment analysis combines the two. Sentiment analysis is bias trading. It's saying not only is the environment or the condition of the market a certain way, inflation's high, interest rates are high, NFPs this morning, like those are fundamental things that we have to analyze in order to do analysis for our technicals. Now, let me come back just to one step before I get into sentiment. How many of you have heard us say, stay away from news trading? Right? Yeah. You've heard me say, don't trade the news. Stay away from the news. My advice to most retail traders, especially beginners, is to stay away from high impact news 2 to 4 hours before and 2 to 4 hours after. Now, when you think about that, that generally puts us in a position where 4 hours and 4 hours on either side is 8 hours. That's an entire session. So that's why when you see heavy news in the night, we may say, we're not trading tonight. There's no trading tonight. Why? Because news is going to impact this session. Prior to a big news event, markets will generally either spike hard because people in the fundamental level know interest rates are going to go down or up, or inflation announcements, whatever. They kind of are on the inside. They know what kind of is going to happen. And so they're getting their money before it happens, which, because we're not privy to a lot of that information, we can be prone to spikes that can wipe us out, which is why we tell retail traders prior to news events, stay out of the market, because we don't want to be in that volatility. We don't want to be in that where we're not sure what's going to happen next. Now, following a news event, there's generally a recovery period. So if there was spikes and then a big spike for a news event, or even if a news event died and the market was dead, what'll happen is there's a recovery period. So if prior to news, price starts booming real high, abnormally, because they're getting their money prior to the news event being announced, then afterward, you're going to see price probably start coming down, or maybe even pushing up higher, depending on what the news event was, because market is recovering from abnormality. And so generally you'll see corrections. All right. You'll generally see corrections post news. Now, here's the issue. Sometimes the market dies before the news happens, especially obscure news. Things like the Jeremy Powell testimony last week. That you saw the market kind of stand still for a day or two because there was a lot of uncertainty of what the Fed chair was going to say. And when they talked about inflation and how this is going to be a long and bumpy road before we get back to normalcy, you know, all of a sudden the market started to kind of move with volatility, because people were like, you know, hey, I'm out, you know, or hey, I'm going to go more in, right? Whatever that looks like. So the point is why do we tell people to stay away from news? All of that, what I just said, let me explain. Not that you can't trade news. Not that you can't trade news. It's because most retail traders, especially those who are beginners, do not understand fundamental and sentiment analysis. Technical analysis is not enough to be able to trade successfully during economic, fundamental, impacting news, okay? However, if you're a really good fundamental trader and you understand the ins and outs of what the banks are doing, you can trade during the news. The issue is that there's increased risk because at some point probabilities come down. And then secondly, you're prone to fake outs. And so that's why we generally don't trade during news, but especially if you're not a fundamental trader, if you don't understand fundamentals, you have to stay clear of news because technicals aren't enough. Technicals are first and foremost and supreme importance, but they cannot do what they do without the fundamental aspect pushing them in the direction that they're supposed to do it. A head and shoulders break to the downside at the neckline is a very high probability trade. However, that's technical. When we start to add fundamental analysis, if there is nothing fundamentally saying that the market should go down, then I don't care what that head and shoulders does. It's not going to have the power to do so because fundamentally nothing tells it to go down. Does that make sense to everybody? The next thing to understand is that sentiment analysis is very key. What does it mean? It means understanding, and I'm not talking about reading a trend line, because you can understand technical trend reading without understanding market sentiment. Market sentiment is the overall bias in the market. Do we have bias sentiment or bullish sentiment, or do we have bearish sentiment? You can't know that simply by dropping a trend line and seeing if we're in a downtrend or not. There's a couple of things that have to happen in order for you to understand sentiment analysis. Number one, you have to be able to identify a trend. Number two, you have to be able to identify strength of currency and speed of movement. And number three, most importantly, is you have to be able to understand volume. If you can't understand volume, you will never be able to be a sentiment trader. You will not be able to go any further as a sentiment trader by simply reading charts and trends. You will have to be able to understand how to read volume, and you won't be able to rely on a volume indicator because that lags. You have to be able to look at the candlesticks and the charts and the trends and understand how to read volume in that, because if you can understand that, then you can understand who's really in control, because sentiment analysis comes down to who is in control of the market. That's what sentiment analysis does. It allows me to do my analysis and say, I believe, based on my analysis, technical and fundamental, that the buyers are in control. So therefore, I am looking for a buy position. Does that make sense to everybody? We have to be able to understand all three if we're going to be a master trader. Now, do you need to be a master trader to be a profitable trader? No. There are, right now in this room, right now in this class, there are people who are profitable traders who I would consider to be beginner to intermediate traders. That's just being honest. It's not a knock on them. By calling you a beginner, I'm not calling you a lesser than. I'm not calling you less than. I'm not calling you diminishing your success or your skill set. But what I'm saying is you don't have to be a master to be profitable. But in order to be a master, you do have to understand all three levels of analysis. You cannot be a master technical trader, do not understand fundamentals, and do not understand sentiment, and call yourself a master trader. You are not a master trader. You are intermediate at best. Can I just be honest? Can I just tell you the raw truth? There is no such thing as a master trader who does not understand all three levels of analysis. Okay? You must understand technicals, you must understand fundamentals, and you must understand sentiment if you are going to be labeled as a master trader. Okay? Is everybody with me? All of that being said, that's a breakdown of the types of analysis, and that and honestly, that in and of itself, I could take what I just told you in the last however many minutes that was and put that out as a complete video, because nobody's talking like that. Nobody's giving you the full depth of understanding as to what these types of analysis are. Now, it's one thing to know what something is, it's another thing to know how to utilize it.